Hello, and welcome to another episode of the Markets at a Glance series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today we'll be having an interesting day where we talk about certain asset classes that are currently moving towards their new all-time highs. We also have seen gold hit a new all-time high earlier today. So we'll be talking about that as well as the current events in the economic calendar. And once we cover all that, hopefully everyone will be able to trade from an informed perspective. So once you join in, kindly say hi on the live comment section, and these will confirm that everything is working just fine. So let's begin by checking out the economic calendar, see what we have in the calendar today. So first things first, you can see that we had an interest rate decision early in the morning at 4:03 a.m., where the People's Bank of China decided to hold interest rate steady for the 1-year loan prime rate at 3.35% and for the 5-year loan prime rate at 3.85%. So not much of a surprise there. So then we had the monetary policy meeting minutes from Australia, which led to a strengthening for both the Australian dollar as well as the New Zealand dollar earlier this morning. So fast forward, we get the final core CPI year over year for the Eurozone, which came in at 2.9% as expected, and final CPI at 2.6% as expected. So the big surprise of the day has been the news that just came in at 3:30 p.m. And this was in regard to the inflation in Canada. So we had quite a number of data points. I'll be looking at them shortly. So I want to take this chance and first of all move to the Bank of Canada website. So you can see the key inflation indicators and how they have been moving. So notice the light blue shade on this edge here between 1 and 3%, which is the target range for the Bank of Canada. So this means that the Bank of Canada is always looking to hold inflation rates between 1 and 3%. So anytime you see this certain level, such as June 2022, when total CPI hit 8.1%, this was very far from the bank target. And this led to basically hiking of interest rates, and that led to a strengthening of the Canadian dollar. So with interest rates remaining high, we continued seeing inflation moving back towards target, with the first real dip into target happening in February this year. So this led to a cutting of interest rates by the Reserve Bank of Canada. And now we have seen inflation remaining within the target range. So there's three key inflation measures. There's a total CPI, which considers all the items in the consumer price index basket. Then we have what we call the CPI trim. This basically eliminates the volatile items within a given month or year. So if there's any excessively volatile items, they are trimmed out. Basically 20%, which means we are taking out 10% on each side of the distribution edge. Then we have the median, which basically shows the average movement of the items in the CPI basket. So knowing that, and now looking at what we are seeing, I'll try to go to the calendar on trading economics. So it tends to display much richer information, especially for the inflation report in Canada. So inflation rate year over year dropped to 2.5%, and this was in the month of July compared to the previous reading of 2.7%, and within the consensus estimate of 2.5%. So core inflation, which removes volatile items, that is food and energy, was down to 1.7%, which was lower than the previous reading of 1.9%. So this shows that inflation is consistently moving towards target. So for the month-over-month change, there was a 0.4% increase. This was higher than the previous, but came in as expected. Then, okay, there's the housing index. It was up 0.2% on the month. This was better than, higher than expected, not better. Then we had the new housing price index, which was also higher than the previous reading. So for core inflation month over month, there was a 0.3% increase, and this was higher than the previous negative 0.1% drop. And then for CPI median, it was down 2.4%, lower than expected. The expectation was 2.5%, and the previous reading was 2.6%. And overall, when you look at the CPI trimmed mean year over year, it was down to 2.7%, which was lower than the previous reading, as well as the consensus estimate of 2.8%. So overall, we can say that inflation dropped lower than expected in Canada. And with that big number, especially for the headline inflation, which came in at 2.5%, then there's that overall expectation that the Bank of Canada will continue cutting interest rates. So that led to a weakening of the Canadian dollar, which we will be looking at later in the presentation. So if you have any questions or comments, feel free to type that in the comment section. So if you're watching these on YouTube, I always encourage you guys to like and share the video, subscribe to the channel. If you're watching this on X, always like and share or retweet the live so that we can reach more traders and hopefully everyone will benefit by trading from an informed perspective. So at this moment, I would like to issue a disclaimer that this session is not investment advice. It's not a recommendation to trade. So you should always do your own due diligence. So that being said, I think now we can proceed. So hello, Trapsked. Hello, Joseph Waitito. Thank you for joining. I can see Charlie Genius in the house. Thank you for joining. Boaz Chemueno, thank you for joining. Hello, Rufus. Good to see you and good to see gold hitting new all-time highs. Thank you. I think it's something we called last week, and so far it has been performing well. So for people who have been following, then you know how much we have been anticipating the big jump towards 2,500. So a good question about the New York Open. So as I mentioned, it's around 5 p.m. So it will open a few minutes before 5. So you should be seeing your charts active at around 4:45 p.m. So let's proceed. What are the other key events or highlights for the day? So from here, if you look at the key highlights, you'll notice that Canada's inflation is the big news of the day. Of course, that's where the volatility is. US futures signal a pause after 8-day SP 500 and NASDAQ rally. So we have been seeing NASDAQ and S&P 500 making new highs every day, very strong rally. Not all-time highs, but basically climbing higher towards the previous record high. So Turkey's central bank held indices steady at 50%, and gold rose to a new all-time high of somewhere around 25.27. We are way above 25.20. So Swedish Riksbank cuts rate by 25 basis points. European stocks extend strong momentum, though I'm seeing a big dump happening in the FTSE 100 or the UK 100 index, which is their benchmark index. Swiss trade surplus smallest in 3 months. So besides that, we also still have to focus on the Fed. So remember, this Thursday, we'll be having a major conference starting in the US, and that's the Jackson Hole Symposium. This big event is expected to see major central bankers around the world meeting and having discussions about monetary policy, with the most widely expected speech being from Jerome Powell on Friday. So we will be expecting some good volatility from that. So from the FedWatch tool, we know that the Federal Reserve Bank of the US will be looking to meet on the 18th of September 2024. And on this meeting, the market is already pricing in a 73.5% probability that the Fed will be cutting interest rates by 25 basis points, which would take US interest rates within a range of 5% to 5.25%. So there's also increased expectations that the cut could be bigger, maybe 50 basis points. So for 50 basis points, we are seeing a 26.5% probability that would take the US interest rates to a range of between 4.75% and 5.0%. So this basically this expectation is leading to a massive sell-off in the dollar index. So if you check the dollar pairs, you might have noticed that over the last 2 weeks, or call it 3 weeks, the dollar has been losing against other currencies. And it's basically because of this expectation that the Fed will be cutting rates on the next meeting, which is in mid-September on 18th. So with that in mind, I don't know if there's any other highlights. So if there's no other highlights, I think it's safe to check the economic calendar again, see what we're expecting later today. So there's a GDT price index from New Zealand, tentative. We don't even know the exact date, but it's a low impact news. And then 2 speeches from Fed members, one from Fed member Bostic, and the other one from Fed member Barr at 8:35 p.m. and 9:45 p.m. I don't expect much volatility from this since a lot of traders are focused on the Jackson's Hole Symposium, which starts on Thursday. So now that we know that, I think it's safe to now shift and look into what we're expecting on the charts. So if you have any question, as always, I encourage you guys to type those questions in the live comment section, and then I respond to that as we progress with the session. So this is the MetaTrader 5 trading application. I'm hoping that everyone can see this. So we have quite a number of charts that are pretty interesting, including Bitcoin, which has been trading more of a sideways momentum. So we don't have much of a directional momentum. And now it seems like Bitcoin is facing yet another resistance and could be moving into another swing back downwards. So the range is not being exhausted yet. And of course, long term, if you look at the daily time frame, you'd notice that Bitcoin has developed a peculiar pattern here. And that pattern seems to be showing that the overall movement is more of a range that is slightly bearish since we hit a new all-time high, which was around $73,200 per Bitcoin. So now going to a small time frame, the H4 chart, you can see Bitcoin struggling to make this recovery. So unless there's a key level break above this area, then the overall expectation is that the market swings back downwards for a while. So looking at other charts, we'll start with the dollar index. Clearly, you can see it has been more of a bearish momentum, with one of the biggest moves happening from Friday last week, Monday, and then through today, indicating a very strong bearish momentum in the dollar index. So this sell-off is mainly as a result of the news coming in, showing a very strong US economy, labor market is weakening, and now the Fed may have to react to that by cutting interest rates on the next meeting. So the overall reaction to this is we see the exact opposite, where we've had almost a third week where the pound has been gaining against the dollar. So we speculated on this on Monday, that is yesterday, and we mentioned that we expect some further upside momentum to be seen in the pound USD pair. So clearly, we are seeing this playing out. So the market is almost hitting the highest price that we saw last month. So the highest price that we saw last month is all the way up. So on Monday, we were predicting 1.3. 1.3 was already hit, and now the market is moving even higher with potential targets extending to 1.30426. So if you missed on the bullish momentum, don't worry, we could be getting a pullback when the market gets to 1.30426. So for Euro USD, I'm still looking for the chart here. Yes, we have Euro USD, which also hit our target. Yesterday, we had speculated that the price would hit 1.10886. This played out as expected, despite a slight pullback here, responding to this previous area of resistance. So notice how the market got to this area, struggled to break at first, but eventually broke and rallied all the way up. So today we are seeing the market progressing again, pushing even higher. So trying to go to the daily chart so we can see what has been happening in the past. So we noticed that this area would be a little bit of a trouble for the euro to break. So from what we are seeing here is that the market got to the area, struggled for a while, and now it's looking like it's going to break and extend higher. So there's a good likelihood that if the dollar weakening is persistent, then the euro could head to the next available resistance, and this is around 1.11374. So it's happening across board for USD trading against the Swiss franc. We had projected that the price would drop to this area here. So price struggled around the support, eventually broke today and got to the target. And now it's seemingly breaking towards the lower side. So we should be looking at now previous areas here where the market was unable to break as potential targets for short selling positions. And seemingly this area too if the market breaks the previous one. So as for gold, I know you guys are eager to talk about gold. So gold has been pretty consistent. So from what we can see here, we saw a very strong rally earlier this morning that got above the previous all-time high, which was 2,500, which was hit here yesterday and on Friday last week. So on Friday last week, this is where the market closed. Then on Monday, market retouches the same area, goes down and then recovers in the afternoon. Today, we can see the rally and the market breaching above that area. And now we can see the market really struggling to go above 25, 28 price level. So there has been quite some noise, especially in these smaller time frames. But overall, the market of gold is pretty bullish. So we could be seeing the market heading further upwards and perhaps getting to 25.50. So remember, we don't have candlesticks on the left because this is a new all-time high for gold. So there is a good chance that we continue seeing further upside momentum. And of course, as always, if you don't have candlesticks on the left, the best strategy in trading such a market is waiting for pullbacks to strike some good entries. So anyone who has been capturing any form of pullbacks, then they have really enjoyed the rally. So it seems pretty strong. Since morning, we haven't seen bearish candlestick. So yes, in the Asian session, especially Sydney, we saw the price of gold attempting to go back downwards. But then this was around 9 a.m. At the close of the Tokyo stock market. We saw the market bouncing pretty strongly. And as we got into the London session, all we have been seeing is bullish momentum. And now we are very close to getting into the New York session. And the time being 4:20, I would say that at this point, you have to be pretty careful. Gold can make sudden moves back downwards. So despite having a new all-time high, makes more sense to trade it very carefully. So if you normally trade on high leverage, I would suggest you trade on a much lower leverage because it's an all-time high and you're not buying a pullback. There's no pullback here. We are very close to a new all-time high. For those who entered early, then it's a safe bet to continue holding. So Brent oil managed to continue pushing further downwards. I remember we had projected that the market would hit 77.864, but it continued moving down. And this afternoon, we have seen the market attempting to make a recovery. So our target area was around this region, 77.864. So the market dropped beyond that and further downwards. So you can see a pin bar that formed on the 1-hour chart, indicating an entry of buyers. And since then, the market has been attempting to make a pullback, which could be potentially headed here to retest this area. So the US has really expanded its oil production, and this is driving oil prices lower. And we'll be getting more data on oil tomorrow. So there is a good chance we'll be seeing more volatility coming in on the Brent oil. So on the US equity indices side, remember, all we have been asking for is for pullbacks. And those pullbacks, whenever they come, they have played out quite well. And anytime you see some of these pullbacks, they might present a very nice entry opportunity. That has been the story of SP 500, NASDAQ, and Dow Jones traders. So notice how every time the market gets to this trend line, there's a nice bounce that leads to a rally, a second time, a third, a fourth, and a fifth. But this wasn't close to the line, so let's call it fourth. So anytime you get the market retesting this trend line, you observe for bullish entry. Then we continue riding the strong bullish momentum. On the daily, this is how it looks like. So we are basically recovering from a big sell-off that had happened here. So for the Nasdaq, it was down 16.92%, almost 17%. And now we have seen consecutive days of market recovery. I would say this was 8 straight days of bullish momentum. So the higher you go, the higher the likelihood of the market pulling back as a result of profit taking. So this pullback might as well be accompanied with more bulls entering the market. So it's the same thing. If you go to the Dow, it's also making some very strong recovery. So it's very close to forming a new all-time high. So the all-time high for the Dow Jones is around here, 41,377. So the market would only have to rally by about 1.29%, which is very possible within a single day. So that would make the Dow Jones form a new all-time high. So for the NASDAQ, if you go to the daily, I believe this is about 5% rally away from a new all-time high. Yeah, this is 5.18%. This might take a couple of days. The average movement of the NASDAQ is rarely 5%. It's usually between 1-2%. So getting a 5% gain might take a miracle to happen in a day. But then if you're patient, you could get this within a short period, maybe a week also. So the recovery continues. And remember, the Federal Reserve Bank of the US cutting interest rates, turning the printers back on is bullish for equities. So SP 500 is the one which is closest to a new all-time high. So the previous all-time high was here, 56.58. And now, judging by the current price action level, so the market only has to rally by about 1.23% to form a new all-time high. So these levels can be sometimes acting as magnets. So yes, now we are seeing a pullback, but there's a good chance we could be seeing a continuation later in the New York session. I'm not saying that 100% guaranteed the price will continue and form a new all-time high. I'm saying that you be aware that this is a possibility. And in that case, if you treat it as a possibility, then you are aware and when you see buyers coming in, then you will be ready to execute your trades. So think about it this way. There is this area where the market was very high, made a big sell-off, and then fast forward, we get into a New York session and you see buyers coming in with very strong momentum here. And then the market ends up higher, which was probably around 1%. So similar thing happens here. Market goes down and then attempts to go up. We see this rejection and a continuation here, leading to a market closing higher. So a similar thing might be playing out today. So be on the lookout. And if you happen to see this, then you might be looking for a bullish entry towards a new all-time high, which would be slightly higher than the current price, about over 1% gain from there. So be aware of that potential possibility in the SP 500 index. So UK 100, as I mentioned, has had a big sell-off since morning. So all we have been seeing since the market opened is just more pressure to sell. But now the market is approaching a key level support area that might be definitive of whether the market bounces or continues with the sell-off. So I just want to remove this and highlight the areas of interest. So the area of interest is literally this here. Sorry, just need a rectangle here. So this seems like a very important area of interest for the UK 100 index. So we don't know whether it's going to break and continue moving further downwards. But what we know is that this can be a key decision point for a trader, especially one who is waiting for a pullback or one who is waiting for a continuation. So having seen the price action here, it's more of a double top formation, which might indicate a reversal. But from a daily time frame perspective, it's a market that was unable to form higher highs, which indicates some form of bearish momentum. So with that in mind, you can see the frequency of the market finding support around these levels here. So from the 4-hour chart, this is how it looks like. So this area here has been acting as support for quite some good time now. So if the market breaks and keeps going down, then that could be a potential target. So from the 1-hour chart, we are looking at Thursday and Friday being the first top, and then Monday and Tuesday being the second top. And now the market is retesting what I would describe as a neckline. So the potential for the market bouncing from here and heading higher is also there, but more likelihood is the market dropping all the way down to 81.23. But you can't just make an entry without confirmation. So we wait and see how the market plays out around that neckline. So for those who are not familiar with how double top works, it's a market that basically gets to a level and fails to form new highs. So the first signal you see is equal highs. So sorry for that. So the second signal is the market breaking below the neckline. So this would be the first top. Second top, it's almost like an M formation. So if we see a break here, then that could signal the trend has changed and the market may be headed further back downwards. So that's it for the day, and I'll be checking the comment section here. So bullish or bearish USD card after the news. As I mentioned, the Canadian dollar has weakened, so there's no reason to buy the Canadian dollar. So you're looking to short the Canadian dollar, but how do you short the Canadian dollar? Don't short the Canadian dollar against the strongest currency in the market. So that wouldn't make a lot of sense. So if you're looking to trade a weak Canadian dollar, you want to pair it with a stronger currency. So if you go for USD card, you can see it was bouncing strongly, but now it's almost losing momentum. So notice how the market reacted. Now it's coming back. Doesn't make sense. Look at the pound. The pound has been quite a resilient currency, made a big move and has held onto the gains against the Canadian dollar. So it's a much better pair compared to USD card. New Zealand dollar has been the strongest currency, so it made a move. It's along or within the trend line, so much more bullish momentum is expected. But also, if you look at the resistance areas, they are not very far off, so you may not have sufficient room to ride a big move. So I would be more interested with the pound card, which has already broken the weekly highs. So we could be seeing some further upside potential from this one, perhaps heading into the next resistance area around 1.77734. So I hope that answers your question. So does the New York session open keep on changing? Since last time it was around 4 p.m. Kenyan time. So yes, after some time, the US adjusts its clock for daylight saving time, which basically changes the opening time of the stock market by an entire hour. So normally you'll find that the market would open at 3:30, then we move to 4:30, then you start seeing some good activity at open. So in this case, 4:30 is the official New York open time. So why is Japan carry trade surprisingly huge? So it's a position that has built up over time. So over time, investors knew that the Bank of Japan was working to fight deflation in Japan, and they made interest rates significantly low for a long period of time, almost 2 decades. And within this period, they would exploit that area by borrowing cheap from Japan and then investing in the rest of the world. And of course, the best, most liquid market is the US stock market, as well as the bond market. So those accumulated positions have become so huge. I've seen numbers being thrown around 20 trillion. Nobody knows for sure unless you do some analytical research, but the position is still very huge. And that means that we could be seeing some further risks in the market. And this would happen if the Bank of Japan decided to continue hiking interest rates. So the Bank of Japan chair already promised the market that they are not going to continue hiking interest rates. And as a result of that, what we have seen is the market making an impressive recovery. So we wait and hold on to that until there's a big change. So unless the Bank of Japan comes back to the market and continues with the rate hikes, then the scare is shelved for a while. Are the signal valid if you want to trade with you? No, I don't issue any trading signals. I only offer my analysis. From Wanjohi, interest rates in Canada are going down, while the reverse carry trade recovery. This makes sense. If you had invested in Canada from Japan, then the interest rates are going down, and you might want to reverse your carry trade. So CAD JPY is a proper candidate. What do you think of the Nasdaq? I think the Nasdaq will eventually hit a new all-time high. So that 5% gap is within limits. So if you are tactical about it, you can capture a pullback and be able to ride the eventual rally that happens from the pullback. So thank you very much, guys. Thank you for your time. I appreciate you. If you're watching this on X, like and retweet the video. If you're watching this on YouTube, like and subscribe to the channel. Also remember, if you are just a beginner in trading, we value you. We have a course available for you. It's called the Novice to Pro series. It's available on the FX Pesa YouTube channel. And if you're just beginning your trading, check the links in the description below to register for a new trading account. And if you are listening on X, then visit the FX Pesa handle and register for a trading account. So thank you very much, guys, and I hope to see you on the next episode. Also, remember, we are still seeing some good volatility, especially in pound card, as I already mentioned. So for gold, as I mentioned, if you're not already in, then the pullbacks might work really well. And we're already seeing this kind of pullbacks coming in. So when they happen, we'll be watching and we'll be waiting. We still expect to see some further bullish momentum in gold. So thank you, guys. I hope to see you on the next one.